Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Wednesday, the 7th of September Trade Day webinar, the Bull versus Bear Trade Day webinar. Steve Miley on the call here for Trade Day. Welcome, everyone. Welcome back, Steve. Hello, who we got on? Anyone we got on? Say hello if you're there. Clinton, is that good? That's from you from this morning, right? I'm just looking in the chat. I got some stuff from yesterday. Yeah, apologies. We couldn't make the webinar yesterday. Had a commitment, even though I was back from Hull's. And obviously Monday was Labor Day. So welcome everyone. Yeah, been away. I had a great holiday, well rested, and I'm back in full force. So what we're going to do today is we'll go run through the calendar. We're going to run through first of all this is the weekly that I published, the macro outlook. Actually, Russian invasion of Ukraine sees risk off them. That's definitely not the one that I wanted. Let me go back and see if I can get the correct one in here. From the, I don't know why that one pops up. That's absolutely months and months old. Let me have a look in here if I can go in. Now we may get some feedback in here because I'm going to go to the main dashboard, which is going to be streaming the webinar. So let me see if I can get down to this without. So in here, macro report from weekly update. Oh, why has it got that one there? 28th of February. Okay, maybe I uploaded the wrong one a while ago. Okay, no problem. Let's just go through the the daily calendar then. But we've had the big data, really, the major data for the week in here, in that we had the ISM data, and we've already had the also had the ISM data, and we also had the PMI data from S&P Global as well. So those were the kind of really big data standout points for the week in here, and not having too much of an impact on markets overall. But we'll talk about that shortly. Let's take a look at what we've got coming up in here today. Fairly light overall on the calendar front in here. We do get Bank of Canada later today, so it'll be interesting to see how they react in here. We are expecting a 75 basis point hike, so it'll be interesting if they go any bolder than that. Probably not. We also get Mesta from the FOMC speaking later today. So those are really the highlights. If you're trading oil, we get the EIA short-term energy outlook later today, and also the API weekly crude oil stock. So if you're trading oil, those are the ones to note on the calendar today. Just looking ahead to the rest of the week, going into tomorrow here, jobless claims, not a big one. Really, the two key events tomorrow, ECB. Let's see what they've got up their sleeve. Expecting up to a 75 basis point hike from the ECB. So tomorrow, I'm really looking for that to happen. Otherwise, the euro is going to get crushed. So that's the big focus for tomorrow in Europe. And we've got Powell speaking as well tomorrow. So that's going to be an important event. And if I just go forward to Friday as well, skim through the what we've had already. Friday is a fairly quiet end to the week on the data front. We get the Canadian employment report on Friday. So really the focus is fairly light today. The focus for the balance of the week going to be ECB tomorrow, and then Powell speaking tomorrow as well. They're going to be the main focal points in here. And we do get Barking as well speaking today. Sorry, I missed that one. So we get Barking and Mesta, and then the Bank of Canada at 10 o'clock Eastern time today. So those are the focal points for today. Let's go take a look at 5 things to start your day in here. The main theme in here is that we're kind of staying in this risk off mode. Which keeps us negative on the stock indices overall. But the big key event is the dollar strength, the continued rise in US Treasury yields, buoying the US dollar in this very uncertain world that we're in at the moment of inflation. The US dollar is seen as king. And so the US dollar continues to gain. The really big moves over the last 24 to 36 hours have been against the yen, seen a surging dollar against the yen. The pound is also getting beaten up, and the pound getting beaten up because of potentially a big giveaway. We have a new prime minister announced yesterday in the UK, and because of that, I'm going to expecting a large government assistance on the energy side, because we've got spiraling energy prices in Europe in here, and the cost of living crisis that we're seeing in the UK is really having a significant impact, and potential for all sorts of things along the poverty line. People are potentially going to be freezing to death this winter in the UK. So we're expecting a big package out of the government and the new Prime Minister, to be announced this week, and that then obviously puts a lot of burden on the national finances, on the government finances, which is then having a negative impact on the pound. The pound is getting beaten up against the dollar, the yen as well. And with the Bank of Japan still staying ultimately very, very dovish compared to the central banks around the world. And with the US Fed very much at the forefront of interest rate hikes, and probably the more hawkish of all central banks, then obviously the US Treasury market is very, very negative, selling off. So lower prices, higher yields, and those higher yields driving the US dollar higher. So US dollar strength, and that's just a reflection of the whole concerns we have around inflation, really, overall, and the general risk-off theme that we've been in pretty much as a went away on holiday, actually, since the middle of August. Equity markets selling off as we've stayed in risk-off mode. And they've certainly damaged a lot of the recovery that we saw prior to that through the early part of the summer. However, for me, bigger picture, I still think that there's a bigger picture. This is all part of a bigger bottoming process. I think the low that we put in early this year is the low for the year, and I think we'll hold those lows if we go lower in here. But however, that's not meaning that we're not negative into today. I will carry on with this in a second. I just got a question from Clinton. If you're interested in discussing price action on a single day, Friday was interesting. Price came right up to resistance, tested for an hour and just collapsed. I was expecting a pullback, but not so hard. I expected continuation into at least Tuesday coming off the bounce. Yeah, it was a very negative session from Friday. We'll take a look at that as we go through the charts, Clinton. Thank you for pointing that out. California narrowly avoided blackouts for a second successive day. So this whole energy crisis is having impacts globally. And then this not really impacted us office return. The yen in here, we spoke about the yen already. The prospect of aggressive Fed monetary tide lifted the dollar gauge to another record. So yeah, dollar yen pushing to multi-decade highs in here, and the yen continuing to be the most negative in here. 30-year Treasury yields highest since 2014, and then the yen is getting beaten up. Bitcoin is and a lot of the cryptocurrencies are pushing back towards recent lows in here. So we said already in here, we've got Fed speakers today. Actually, some more in here than we've got on the calendar there. Barking at 9 a.m. Mester, Brainard, and Michael Barr all speaking today. So we're certainly going to be watching that. And then, as we said already, Bank of Canada expected to raise 75 basis points at 10 o'clock Eastern time. Okay. What else do I have for you in here? So US futures actually ticking higher, probably a sell opportunity. We'll come to that when we look at the charts. Oil has seen a rebound in here. Putin warns a response to price caps. So oil rebounding, and the US futures just edging higher, but still looking very negative since Friday, as Clinton has pointed out. King dollar stomps on yen as US yields rise. We've already kind of covered that. EU proposes cap to claw back Essex profits. So talking about a price cap on gas prices in here in the EU. And again in here, looking at the yen plunges worse despite strongest government warning yet. So comments from officials are trying to stop the weakening of the yen. However, it's not really doing anything. So there is speculation of intervention by the Bank of Japan, but as nothing, even with that speculation, even with them we call it jawboning. They're trying to talk the currency up, so it's obviously dollar yen up, it's dollar up, yen weakening. Okay, they're trying to talk the yen up. However, and usually that does enough to see moves back higher in the yen. This jawboning, but unfortunately, it's just not working for the Japanese authorities at the moment. So maybe they will go in and have a true intervention and actually intervene in the currency markets. Where are we going today? Well, European bourses in here, cash markets are slightly lower. If we look at US stocks in here, they were lower yesterday, but small rebounds in here, but we're talking about 0.1% up, having lost about 0.5% yesterday to new bear move lows. On forex live in here was focusing on cable moving towards a March 2020 low in here. So cable, the pound versus the US dollar, looking very vulnerable, and again reflecting both that dollar strength and the negativity in the pound. Having come back from holiday, I was kind of surprised. Obviously, I keep abreast of what's going on in markets, but I'm not drilling down and looking at the CME tools and that kind of stuff, right? I'm watching what's going on. I'm watching the charts. I'm watching the headlines, but I didn't really drill down into this. And it was only when I came back that I looked at this. I was kind of quite surprised that we're currently at 225, 250 on Fed funds. And 275, 230 is still at nearly 30%. So that's a 50 basis point hike. I expected this column to be almost up at the top here. So this is for the 75 basis point hike at the 21st of September meeting, a couple of weeks away. But still like an off chance of only a 50 basis point hike. So I was very surprised at that. What's the real development's been further out there. So if we go further out now, we're now talking 350, 375 by the November meeting. And we're talking about 375 to 400. So this peak is higher than previously, right? This peak at 375, 400. And then that peak stays if we go into next year, 375, 400. So if I go and isolate that, where we do the historical in here. And if I turn all of these off, they should have a tool in here where can you do it in here? No, you can't. Yeah, they should have a tool where you can just turn all of these off. Be much more useful, right? And then turn on the one you want because no one's looking at all of those. Right? There's the 375, 400, right? So, just only, middle of August when I was around, there was only 20% chance of getting to 375, 400. Now we're up at, a new high today, 70% chance of 375, 400. And interestingly, and this is for the 14th of December, sorry. So if I go back to May in here, it's not going to do that, is it? Sorry, not May, September. No, it's not gonna. It's gonna turn them all on and off again in here. But basically, what it's saying in here, if I go back to the current, we get to 375, 400. So that's a higher peak than just 2-3 weeks ago. It's a much higher peak, and that peak then lasts. If we go look, February 375, 400, March 375, 400. Remember, we're looking between March and May for the cut, right? 375, 400, June. 375, 400 is still the peak, right? Probability 375, 400, right the way out to July of next year. So basically, we're saying get hitting 375, 400 by December, end of the year, and 70% chance of that, and then no rate cut, for the first half of next year. Where before we were looking at peak. I can't remember where the peak was. I think we were at 350, 375 by year end. I'm pretty sure of that. Just 2-3 weeks ago, we were looking at 350, 375 peak, and then looking for cuts between like the March and May, around the March-May meeting. Okay, now we're looking at a 25 basis point higher peak and no cuts. Okay, that's the concern. That's the hawkish shift. Okay, and that was reinforced after Jackson Hole, not last Friday, the Friday after before. Okay, that was the big development. Because we had that kind of dovish, alleged dovish pivot, which I always called out. I don't know if you remember that, guys. I was always questioning that dovish pivot. I didn't really see that dovish pivot that we had. I think the last Fed meeting, right? They were talking about that being a dovish pivot, or maybe Powell spoke just after in a testimony. I can't quite remember, but there was a big talk of a dovish pivot, and that sent the stocks, higher into the first half of August. And then since then, there's been a pull. The Fed have basically wound that right back, right, and they've said no, there's no dovish pivot. We're staying hawkish. We're going to be, if anything, we're more hawkish. Okay. Where does it leave us on the charts then? Oops, I thought I logged in. No, I have. I logged in here. So let me just make this one here bigger. I'm going to start with the stocks in here, and we're on the S&P. So clear downtrend. There's the failure last Friday, recovery failure, kind of goes right up to resistance here. And fails. We'll zoom in on that. Fails, and then obviously you had Labor Day, shortened holiday, and then made new low yesterday. So it was a real abject failure back on Friday, as Clinton pointed out. Very, very negative. Fails right at resistance here. We'll look at that in a second. Made a new low yesterday. Now you have made a new low and bounced today. But if we go into the 30-minute chart, in here, and where's Friday? Where were we on Friday? Here it is. So look, here's the resistance points. Look, right up at this is what Clinton's talking about, right? So we had these resistances, 40-18 kind of area. We're still on SEP, right? We're still on SEP, yeah. I think we're still on SEP to the end of the week. So 40-18 in here. area, and we failed right there, an abject failure down to the lows, and then we get the rebound, and then failure again yesterday, and then I think this is a sell opportunity. You've got like a little band of resistance around here, right where we are, where we've gone up to like 523. Sorry, 39.23.24, and then again at 39.44. I think only above 39.44 gets a bit more interesting. Certainly above that peak there, above 39.63 and a quarter, then it looks bullish, right? But we're a long way from there, and we've run right up against resistance here. So around 39.23.24, and then but above 39.44, I'd be above here. I'd start to get a little bit worried. 43.44 above there, but so I think playing for me, it's still playing it from the short side. If we go back to the daily, where can we hit today? Well, look, we've already taken out that important swing low there. We took that out. We nudged above it at the end of last week and then threw it yesterday and threw it again this morning. This could be down at like 38.36 today, down in this area here from this impulse low. So that's a real downside threat. You've also got this tentative trend line that comes off the low and through here. Just expand that out. Look, we're sitting right on this tentative trend line. Okay. So down through today's lows, we'll then probably see an acceleration, as I say, down towards like 38.34, 38.30 kind of area for me. Let's do the same kind of analysis on the NASDAQ, not far off the difference in here. Again, we kind of went down to this swing low in here that was from the end of July, 26th of July. We kind of held there at the end of last week. Abject failure back on Friday. And then new low yesterday. Dip, small rebound, still looks negative in here. Where can this break? Where it breaks the low, let's put the same trend line on, tentative trend line. I think that we're through this one. Yeah, we're through this one. We're through the same trend line on the NASDAQ. So we left that behind last Thursday, Friday. So that one's been left behind. Looks negative in here. Where can this go down to? Well, it's kind of sitting just above these impulse supports in here. 11.889, 11.857. Down through there opens up maybe down towards, I don't know, 11.620, 11.550 kind of area down into here. Okay, down towards these spike lows. So yeah, that's looking negative. We go into the 30-minute. Again, look, there's the failure from Friday, fell below these peaks over here. Abject failure, rebound failure again yesterday. And then look, actually it's failing right now. We're selling off as we speak. Yeah, I'd be pulling the trigger on this one right now. I think it's just giving you the signal. There's the signal. We're talking about the short in here anyway. Look, you got this little counter trend line up. Look, sitting right on that. Boom. I think we're getting the signal. For me, that's the signal right now to pull the trigger on the short. So that looks very, very negative for me. NASDAQ, as I say, notably low on the downside potential for here. From here in, let's take a look at just a bigger picture. I'm not going to go into the detail on these, but there's the sell-off in the treasuries. This is the 10-year note. Another big sell-off yesterday. This is what's driving the dollar higher. You're getting down to lows in here posted back in June, okay? And they're a target for today, and certainly this week. If we break these lows, then it's going to look really negative for the treasuries and higher yield prospects and positive for the dollar. Here's the dollar index. Another new multi-decade high in here for the dollar index, and right on the highs right now. I can't do anything but buy this. Big bullish outside day yesterday, dipped and rebound. Bullish outside session for yesterday. All looks very positive. Let's take a look at gold and oil. So. No surprises with the dollar. The dollar strong, the gold is weak. Okay, and gold went right down to this. So this is on the deck contract. We went right down to the low in here. Where's my thing? Why is that not coming up? Data box. Oh, here we go. Let me just make this bigger. So in here, the low in here on the deck contract from 21st of July, we have it down at 1696.1. Last week we got down to 1699.1. We're lower again. Another really negative failure candlestick yesterday. Look at this, really negative candlestick. Been in sort of consolidation, tried to recover, abject failure. Lower today but bounce. But I think there's real risk for a retest of not just last week's low, but this low here. And below there then opens up a much more negative theme. If we go into the 30-minute chart, again, look, we have had this rebound, but it's failing already. And again, if we put the little counter trend line on, this little counter uptrend, recovery trend, look, it's similar to the NASDAQ, playing with it now. So for me, this is pulling the trigger on the gold short now, aiming for not only today's low, not only the low from last week, but that 96 low from earlier this year. And below there, it looks really negative. Let's take a look at oil. Oil in here on the November contract. All right, let me just double check that. Pretty sure that's right. Yeah, on the sorry, no, October contract. Excuse me. Yeah, yeah. Sorry, October contract here. Excuse me, October contract. So despite this kind of rebound we had, looking negative for me in here, sitting right on these lows in here, and these lows here, the more recent lows around 85. 85.19, the low there is it 85.37 actually, and this morning has been 85.08. Yeah, so we've taken out these lows. This is the key low in here. It takes this low here out, so that low there is 84.10. Through 84.10 this looks really negative, and so happy to be short in here. We're on this on the daily chart. Let's take a look at the intraday chart. So we had that kind of little rebound, but look, fading again. It's the same kind of chart we're seeing on gold, the same kind of chart we're seeing on the Nasdaq. A lot of correlation in these markets right now. You got the little counter trend line there. Look, we're sitting right on it. So again, gold about to give us the trigger for the short in here from my perspective. And, lackluster rebound, dead cat bounce in here throughout. Where are we in here from the last week or so? Just not being able to recapture any kind of decent ground in here. Through the last week, and then even this big rebound that we saw in here through the second half of August, late part of August in here was completely fouled. So looks really vulnerable. We have made a new low in here, just about made a new low below the mid-August low in here this morning, and I think that low there is going to be critical. If it takes out that low, as I say, over here from, this is back in, when's this? This is from March, 15th of March. It takes that low out, 84.10. It looks really bad in here for oil, and I think we're getting a signal to sell it right now, and we could attack that low later today. So yeah, we're still very much in risk off mode for me. Short equities, short oil, short gold, long the dollar, long and short treasuries. There's nothing much worth owning at the moment apart from the dollar. All looking very, very, very negative in here from a day trade perspective and a short to intermediate term perspective. Just as a side note though, on a bigger picture view in here, looking at the S&P, and even though we like to trade the Nasdaq and stuff, we are holding this trend line, this tentative trend line in here for the S&P. I still think we're going to swing. I think we'll swing before this low over here. So this low in here is 37.23.75. On a bigger picture, I think we'll come in here. I said some time ago, I think that this was the low for the year, and I think we've had the high for the year, and kind of we're still stuck in that range. I don't think we'll undercut this low. I wouldn't be surprised if over the next month or two, as we get as inflation kind of peaks. In the UK, for example, in Europe, they're going to put in these energy bills are going to go through from governments. That's going to cap off energy prices. Obviously, one of the biggest drivers of the higher prices for all goods is the higher energy prices. If we get governments acting to curb those significantly, then that's going to help push inflation down, and then we might see a backing off by the central banks because they don't want to tilt these markets. We're probably going to go into recessions anyway. They don't want to push them into deep recessions. So not the markets, the economies into deep recessions, and they don't want to see markets starting to go into free fall. And if they start undercutting the lows that we posted in here back in June of this year, then they are going to look very vulnerable to maybe another 10% correction on the downside. So I think what we might see potentially as early as the September meeting from the Fed, but maybe after the Fed meeting, going into the Fed meeting, we might see them kind of pulling back a little bit on their the more hawkish tone we have, and just if we start to see signs of inflation, this is my personal view, okay, but I think we're going to see central banks back off a little bit. I think the lows that we have, so bigger picture, I think it's not massively doom or gloom, but in the short term, most of this stuff you're playing from the short side. Pretty much every market apart from the dollar you're going to be short of. Okay. No questions coming through. Glad to be back, guys. Hope that was useful today. Stick it in the forum. Please, we get only a handful of people coming on the webinars live. I know a lot of people watch them on catch up, but if you can stick stuff in the forums about how great, obviously you guys have come on. Obviously appreciate the webinars. Put some stuff in the forums if you can, and saying advertising the webinars, and then hopefully we'll get a bit more of a community going in the webinars as well and get a bit of interaction. Yes, that would really help. Okay. All right, guys. Hey, Andreas as well. I'm going to wrap it up there. I'm going to wish you all a great trading day. Stay safe, and I'll be back with you in another webinar tomorrow.